What's happening, traders, and welcome back to Shifty FX. What I'm going to break down for you today is a USD Swiss franc trade that I managed to capitalize on, getting the year up and running with a take profit. What you can see on the right hand side, and like I've said before, I'll just keep on regurgitating the same information. We had a prior bullish candle close. We are anticipating, using our two candle theory, that the next day will be bullish. Previous week, bullish candle close, anticipating the same thing, that the next candle close will be bullish. In saying that, when we have a look at the market, understanding that the previous day's high or swing level is our targeted draw on liquidity. And how we aim to capitalize on this, I'm just going to put this down for you guys and I'll break it down. So entry 90479, our stop loss is at 90386, and our profit margin was at 908.01. Okay, it should be about a 3.4% R trade, just like that. All right, so if we remove this, jumping into the trade, what we can see on the hourly time frame. So understanding that, like I said, we have the previous day bullish candle close. On the hourly, we can see here an order block, high probability one. Again, from all my videos, how I discussed with you is that we are looking at a sweep of liquidity and a break of structure. We can see we get a sweep of liquidity, break of structure, leaving a fair value gap. Doesn't matter the size of the fair value gap, guys. It has left a fair value gap. And you'll see here how market perfectly respects that fair value gap. So H1 fair value gap within that area. So market taps into the order block. I initially missed this entry on the 15-minute. But once I got into the trade and I could see that EU, GU, and everything else was moving, I managed to look at my USD Swiss franc pair, just the three pairs for me, and understanding that DXY doing its thing, we are looking to target that draw on liquidity. What we see here is a push down sweep of the previous swing low. Like I said, we want to see a clear sweep liquidity. Minor sweep there. Nonetheless, still a sweep of liquidity, giving us a good indication, like I've discussed, that that is our dynamite candle. The fuse has been lit, okay? We need to see a reaction from that point. We need to understand that if we are going to capitalize on these turtle soup trades, that we have a swing low taken and an immediate push to the upside. The longer we see it hovering around here, the less likely it is to play out, okay? So in saying that, we have our dynamite candle, fuse is lit. Now we need to anticipate, again, rudimentary, the explosion. Where's the explosion? Our engulfing candle. Once we see that develop, you are in the market with instant execution. Give or take a little bit with spreads. You can see here, market suffered a bit of drawdown. Realistically, for it to come back down there, we are most likely on the wrong side of the market and just taken a loss. That's all. That's all. It's just probabilities, okay? You're paying your business expenses. That's all. Instant execution, market then draws down a little bit, and immediate momentum to the upside. Where your take profit is your targeted draw on liquidity for the day. Okay, guys, not making it complicated, not having to sit here, drop to the 5-minute. I wouldn't even understand how you get in here. So you could argue the fact that there's an inversion, but you've tapped into another fair value gap, so that's not valid. You would have to sit and wait for that change in the state of delivery where it doesn't retest it again, given that you use the bodies. so you're not triggered in the trade. And again, making it overcomplicated. What we are doing, again, everything we do is bias, is priority, is market respecting bullish order flow. Yes. What is our narrative? We have a previous day's candle close to the upside. Brilliant. What are we looking for? Open, drop below, sweep of liquidity, expansion to the upside. Not having to sit here and wait on the 5 minute looking for your entries or 1 minute or 2 minute. Just getting in the trade, guys. And going back to the basics. Honestly, just go back to the basics. We have a sweep of liquidity. We now have an engulfing candle. The first thing you ever learned in trading. Candlestick formations. Engulfing candles, shooting stars. As easy as it comes. Granted, ICT introduced us to turtle soups and all that, but it's been around a lot longer than ICT. I assure you. Is things called 2B patterns that were traded by Wall Street traders. Trader Vic, who created it with sweeps, extended W's, extended M's. These are professional traders, guys, understanding that there is money there. And you just need to get in the trade. Please do not make your entry priority. It is not. You're looking to capitalize on the trade based on your narrative and your bias. All right, traders, I hope that helps you out. Again, these are just going to be coming through every single week with a trade recap. Whether I've taken it or not, we will discuss these executions, what we've seen in the market reviews, and then again, we'll be kicking off with some outlooks and forecasts for the weeks to come. All right, traders, have a good one, and we'll catch you soon.